This is the Business Stuff Podcast. This is where I will share the lessons I've learned from advising thousands of businesses over almost 30 years. Each episode will give you practical insight to allow you to learn from other people's mistakes. I'll be pulling in experts from our team and the world of business, and together we'll make sure your business is giving you what you want. My name is Martin, and this is the Business Stuff Podcast. Hi, it's Marty from the Accelerator team, and I'm here again with Jack this week. Hi, Jack.
Hello.
How are you doing? Yeah, good.
Good.
This week, Jack, we're talking about business structures.
Yeah.
And we're specifically going to go through the three main types of structure, talk about some of the loose pros and cons, who might use them, when you might not use them. And then also we're going to go through a bunch of things which are not structure specific, things that everyone needs to do. Because I think sometimes people think, well, only companies have to do certain things. But there's actually a lot of things that are common across the board, isn't there?
Yeah, there's a lot of good practice out there. And I mean, also we get a lot of queries around about setting up new businesses. What structure should I do?
Yeah.
And there's not always a clear-cut answer, really. It kind of
there's not a single answer, is there?
No, exactly. We never say, you've got to set up a company.
Yeah, and I think on the extremes, there are definite times when you absolutely should be one and not the other. You know, and the same goes for the opposite end. But the majority of businesses could probably get away with any of these. But, you know, that's why it's not a simple question, is it?
Exactly, yeah. And that's why we love to live in the ambiguity of it all.
Absolutely. Keep it as ambiguous as possible. Never have to give an opinion.
Yeah.
Let's go through it then, right? So the three main structures we're going to talk about are sole trade, self-employed. The next one is partnership, and then company being the third one. Yeah. So should we start with sole trade? We've put together a very loose...
I mean, I have to say that it was incredible that you pulled together the notes, because that's normally me.
It's normally you doing the prep, isn't it? So pros and cons then, sole trade, and I suppose it's worth saying, first of all, this is the easiest, isn't it?
Definitely, it's something that you can literally start today, very little to do in terms of getting set up. It's very much a case of almost in your own head going like, yep, right, okay, I'm going to start trading.
Because once you're doing it, you are a sole trader.
Yeah, exactly.
Yeah.
And in HMRC's eyes, in terms of you setting up a trade, is very much in that case when there's a pattern starts to develop. Yeah. And it's not a one-off transaction, and that's very much in the attitudes and reality of the situation. So
yeah, if you're doing something and your intention is profit, and we'll come on to that again later. I've just thought of something else to talk about.
Put it down. Put it in the notes.
It's on the notes for later. It's on the notes for later. But as soon as you decide that you're gonna, buy a van full of tools and start fixing people's pipes, cutting, whatever it is, selling your time, your services in some way, you're in business.
Yeah.
So in that regard, it's very straightforward. There's also, as a result of one of the cons, it's worth saying here that as a sole trader, you're at risk. Your personal assets are basically at risk if something goes wrong. And as a result of that, they kind of don't really care what you do. There's no formal, ways to report your profits. There's good practice, but you're not obligated to share what you're up to, other than with the inland revenue.
Yeah.
And the basic premise is, if someone's engaging with you as a sole trader, if you get something wrong, I'll sue you and I'll take all your stuff.
Yeah. So we refer to it as unlimited liability.
Yeah.
So potentially, yeah. Although you may have certain business assets that you hold as a sole trader, those aren't the things that are limited. Like, everything's on the line. So if you get sued for £500,000, then you're going to have to
you'll take all your tool, your van, everything goes, and then your stuff goes as well, doesn't it?
Yeah.
And that's assuming insurance hasn't stepped in, but we'll cover insurance because that's something common to everyone. So it's easy. Once you start, you are a sole trader. It's relatively low cost.
Yeah. Well, as you said, there's no necessary obligation to pull together a set of accounts, for example, where you might do in other scenarios. It's very much a case of the actual compliance costs are limited to your personal tax return, if you want to pay someone to do that. So even then, you can potentially, if you can be bothered.
In theory, you could pull your own tax return together. There is no need to produce accounts for anyone. No. You might need them for the bank or something like that if you're going for borrowing, but you can basically put your trading profit on a tax return, submit it. HMRC reserve the right to come back and query it, of course.
Scrutinise it,
so you do need records, and again, we'll come on to that later.
Yeah.
But you don't have to involve anyone else. It's strictly you and the inland revenue.
Yeah.
And your customers, they're the only parties who need to be involved there, isn't it?
Yeah, absolutely. And then, I mean, you touched on it there, but in the sense of how a lot of our clients do it is they do get those accounts because they want that additional level of comfort and evidence. And again, it's good practice.
Yeah, you want to make sure you're actually declaring the right profit, paying the right tax, etc. So, you know, it's easy, quick, low cost. The risk is all of your stuff is on the line. The next thing that I always say to people is, and I don't think this matters so much now for reasons we'll come on to, but perception. If you know, it's like Dave in his van. There's like a perception that it's a small business. Yeah, it might not be. Dave might be. You know, you might have a team of 100. But the idea is, Dave's a self-employed. Right, okay then.
I bet he does cash in hand.
And there is an element of that, isn't there?
Yeah. Oh well, if I'm getting him to do my own extension for me, is he going to come back and fix it when something goes wrong?
It's going to disappear. Yeah. So and sometimes, you know, I've heard people in the past say, "Well, I'm putting a tender in. I better get a company because I need to look established." And again, I'm not sure that really matters so much now. I think it's definitely easy for someone to set up a self-employed business, be a sole trader, and give the perception that they're actually really big and established. Because it's how you act, I think, gives you that perception.
Yeah, we've talked about it off there, but like the technology that's available at a low cost for sole traders makes you look a hell of a lot more professional than you actually might be in reality.
Yeah, so you have a good looking website, you can have professional systems for giving quotes and invoicing, chasing payments, all of these things. Your social media can be really good now. Gone are the days, I think, where to have that big firm feel, you needed a whole team of different people doing that. You can buy these services in quite cheap now.
Yeah, outsource it.
Use virtual assistants, PAs, whatever you want to call it. But these things can all be done to make a very tiny business look really good, can't they?
Yeah, absolutely. I mean, I just had a plumber in the other day and he pulled together a quote, and again, it was very much automated systems. Right, okay. Right, I've had a look around, bang, here's the quote, email straight over, you can press it, bang, turns into an invoice. Yeah. It's, really, really clever.
So you can look far more established and professional than often some very big businesses can.
Yeah, because historically, for that to work, they would have had to get back on their van, either got their laptop out, did it all the hard way, or had a person that they employed just to ring them up and kind of talk them through it. And it certainly wouldn't be that quick.
Yeah.
You couldn't walk out of the door and press a button and then it would be straight into my inbox. Yeah.
So I think that small perception is kind of gone now, isn't it? So and of course, one of the ultimate pros, I suppose, is you're the decision maker. There's just you. You haven't got any business partners. There's no one else you need to bounce stuff off. Yeah, I suppose.
I suppose
you're flexible and dynamic as a
you're the ultimate arbiter of what happens. You are the go-to person. The buck stops with you. You have autonomy to do what you like. Yeah, which is very beneficial for a lot of people. I think probably on the other side of it, you may think that not having that sounding board isn't the best thing in the world. But well, the con is it is all you. So the pro is it's all you. Con, it's all you. It's all you. It's all on you.
It's just how you say it, isn't it? Yeah. I suppose the next step then for a lot of people is partnership. So let's say you've started, you're expanding, you want someone else to come in with you. So this is different to employing someone. There's now two people in business together, and it might be two, not otherwise connected people. It might be a husband and wife, it could be siblings, doesn't matter, parents, Jack Spoor and son or whatever, it could be anything. So let's go through that. I don't think we should cover LLPs too much. It's a type of partnership that steps a little bit between company and partnership. Yeah. So it's got a bit of, I suppose, corporate type regulatory stuff to it, but it doesn't crop up that often, and we can cover that separate if we need to down the line. Yeah. So we're just talking about normal partnerships here. And again, I suppose they're pretty easy. As soon as me and you decide we're going to do it, we're in a partnership, aren't we?
Yeah, and I think a big misconception about that is that you have to kind of register it like you would a company or something, and everyone have to let HMRC know that you're in partnership together. But in reality, the first time they'll find out about it is when you submit your partnership tax return. Yeah. So it's very easy, very quick.
You do still need to register. Yeah. But you just say me and Jack are in partnership and we're selling windows. And, you know,
as opposed to it being a formal application if you were setting up a company. For
yeah, you're not requesting it, you're notifying rather than, you know, you're doing anything consciously.
You would do with a sole trader, really.
Yeah, yeah. Kind of. So it again, it's relatively straightforward. And I suppose some of the pros here are, it's quite easy if me and you then say, well, how are we going to split the money? We can quite easily just agree that between ourselves. We haven't got to necessarily tell anyone. Probably a good idea to have something in writing though, which people often overlook. Definitely,
yeah. I mean, there is certain protections that are naturally brought in when a partnership is set up. However, there aren't the specifics in terms of, like, that's all very much up in the air in terms of it will. I think it even makes reference to the fact that you would refer back to the partnership agreement for profit shares. So, although HMRC and when you set up a partnership offers a certain amount of guidance in terms of what the rules are, like, there still requires your input on this, particularly the profit share stuff and capital accounts, because
who's going to put the money in? So you know, I mean, the accounts themselves don't really need anything different to a sole trade, other than we need to divvy up the profit and divvy up who's put money in to start it, who's provided the working capital, those types of things,
and what counts as being put in as capital against an expense, for example. So we certainly had disputes around that in the past in terms of, well, I thought I was putting that in for capital purposes, and I know that was to cover those costs or reimburse for these costs. So when
you say we, you don't mean literally. We haven't got a window.
This is when we're going to air our dirty laundry.
The royal way. Yeah, we've seen this many times with people. And what's interesting is, so there is, I can't remember the time of the act, it was like the Partnership Act 1850 or something nuts, basically sets out the key parameters, but most people want something a bit more flexible than that, because all that original act will say is like, and this is one of the risks, by the way, if you lose us a load of money, I'm going to take your house, but I'm going to take Marty's house as well. Yeah. And that's one of the risks, isn't it?
Definitely, yeah.
So when you're a sole trader, it's all you. When it's all you, here it's just us. Yeah. Ooh, but it's us. That's interesting. We can lose each other's stuff, can't you?
Mm-hmm. Yeah, it's very. I mean, it depends how you're looking at it, as you said. It's very much that tone of it's us, but then it's also us, and putting that extra party in can add a hell of a lot more complications.
Yeah. And you've really got to be 100% sure, and I think people quite often go into partnership quite easily and freely, which is good. I'm all for people, jumping in 2 feet sometimes, but I don't think they quite realise that if they pick the wrong running mate, they'll lose their stuff.
And it's quite hard. It's not hard, but it can be hard to unpick a partnership and demerge, I suppose, and go off and do separate things.
And it's what's interesting as well is I think it's reasonable to say that most of the disputes we have with clients who are in disagreement with each other, I think that happens more in partnerships than it does in limited companies. I don't know why. So that's just anecdotal, but I know certainly a lot of the professional partnerships, doctors partnerships, GP partnerships, I think they tend to have a bit more dispute about sharing out the profit, probably because they haven't got a solid partnership agreement that stipulates what you're meant to do and why you're meant to do it.
I think it's the fact that it's so close to you personally, because although you're essentially a partnership as two sole traders combined, so it's actually you more personally on the line for a lot of stuff, whilst the company there's less of that risk directly attached to you, because you've got that additional separation.
Yeah, which we'll come on to that.
Sorry, I don't want to jump
No, that's all right. I think one thing that's worth saying for sole trade and partnerships is you're taxed on your profit share, or for a sole trade, your profit, regardless of whether you spend it.
Yes.
And again, a lot of people get confused by this, go, well done, Jack, you made 100 grand this year. And you go, but I only drew 2 grand a month. Why am I paying tax on the 100 grand?
Yeah.
And the point is here, because it's not a separate legal entity, the money once earned is yours, whether you've spent it or not.
Yeah, and that's the flip side of the risk, is in terms of like all the risk falls on you, but also all the rewards. So you're entitled to all of those profits, which
it's your money to do what you want with.
Which is fantastic. But if you don't, there's not that step between you actually incurring it and spending it, in terms of you're still taxed on it regardless of what you spend it on.
Yeah.
So you could be the most frugal person in the world, but you still made 100 grand. So
the business, which is you, still made the money.
Yeah.
You still have to pay the tax.
Which means, you're taxed at, at higher rates.
Whatever rate you want, whether you spend it or not. Which again, I think a lot of people don't get that. And also, I think a lot of people, I've seen people send through their figures to us. They kind of go, "Oh, and my wages are $2,000 a month." If you're a self-employed person, you're not an employee, so you haven't got a wage. It's not wages. Yeah. And we've seen that crop up, that terminology disconnect, I think, is quite often there.
And similarly on the flip side is that they've spent money on stuff that they thought were business expenses when they're not. So they're like, but I operate out of my house, so surely my mortgage counts.
So again, they've got no money, but they've still got a profit. Yeah.
And it's just like, but I operate out of my house, so surely the mortgage will cover and all of the bills and everything.
Yeah. So then 90% of that's personal. It's got nothing to do with the business. Yeah.
So when they look at their capital account and they go, but why am I overdrawn? Because it's like, well, because all of the stuff you thought were qualifying business expenses are actually where you're drawing money out of the business.
That is your drawing, yeah. And you've got to pay tax on it.
Yeah, sorry about that.
So the next thing then is company.
Yep.
So limited company, this is set up at company's house. It's got to be registered. And the primary thing that companies used to be for really was about that risk protection, the limited liability.
Yes.
I think a lot of people now just see companies as a way to possibly save tax. But if we can start just with the risk first of all, I suppose the main trade-off here is you have to provide publicly a lot of information to allow your customers or your lender to make a decision based on an agreed format of publicly available data.
Yeah.
And there's a trade-off there with your privacy and that liability protection, isn't there?
Yeah, as you said, like in a sole trader scenario, and even to an extent with a partnership, it's a couple of numbers which are not publicly available, and you disclose them.
And it's up to you to persuade a lender to loan you money.
Yeah.
But if you're buying something, they kind of go, well, I know if you don't pay, I can take your stuff.
Yeah.
They know that. With a company, they can't get your stuff unless there's something unusual happens.
Definitely.
So they have to have an agreed format of information in a prescribed method, don't they?
Hence why we've got a set of accounts that has a balance sheet and a profit and loss account.
Has to be drawn in a certain way. And I suppose that then, with that in mind, that opens up most of the other stuff. It's not as easy. It can still be done quite quickly. You can set a company up in a couple of days, that's no problem. But it costs a bit more. Yeah. Because you've got to have your accounts formatted in a certain prescribed way. I've said that many times now. I won't say it anymore. But
I like how you're being vague as well in terms of a certain prescribed way. Because
as a non-accountant, I couldn't tell you. but the key point here is this is where then it's unusual for someone to produce their own company accounts because they quite simply don't know most of these rules.
No. Yeah. It's complicated, and even on company's house, which gives you the chance to put them in, there's still a chance that there's still a chance that HMRC will come back and look at some of these numbers as well, because it is complicated. Yeah. And I'm sure there's probably there's evidence out there to suggest that people that submit their own accounts are probably going to be under more scrutiny.
Yeah, I think anecdotally, we picked up years ago at a Chartered Institute of Tax. Somewhere there was someone there from either HMRC or I can't remember now, but basically they kind of said, we do look more closely at people who haven't got professional help because you can just know that they will be making more mistakes. Yeah. And I think a company that hasn't been signed off by someone doesn't mean that they're wrong, but if you were going to spend time only investigating where you thought something was wrong, you would start there.
Exactly, yeah.
And that's not just us trying to scare you into getting Robson Laidler. I always say get some help. I'm not fussed where you get it from, but
the benefit of using an accountant is that they do provide a certain level of assurance to those numbers. They sign an accountant's report, which doesn't say that the figures are absolutely correct, but it's saying that they're
at least being looked at.
Unlikely, materially incorrect.
Yeah. But they're thereabouts. Yeah.
Yeah.
So that all obviously comes at a cost. There's also the downside of you have to report, but not just the accounts have to be formatted in a certain way, but also things like on your letterhead, your business card, your website. You have to let everyone know that you're operating as a limited company.
Yeah.
Again, that's part of the trade-off. Well, you've got limited liability, but only if you've told everyone. Because if you haven't, the personal liability can still fall to the director.
Yeah, and there are still scenarios where the director is on the hook for stuff, and even directors at Companies House, but people that act as directors or say that they're directors can also then can put the business in a certain position. Like you may not be a director at Companies House, but if you then go off and sign a contract in your guise as a director, then that contract is still legally binding. So stuff like that people may not be fully aware of.
Yeah. I know it's interesting. People kind of go, oh, we'll make them a director, but well, you can then carry out actions on behalf of the company. It's reasonable for someone to assume you can do those things.
Yeah.
So again, just like we said, partnership agreement, shareholders agreement, and I think in a company more than anywhere else, there's a separation. And I normally say to people, there's 3 different capacities that you can engage as a company. The shareholders, and this is the first time where the shareholders, the owners of the business, may not necessarily be the people who work in the business.
Yeah.
Because you could be a shareholder in a company and not even know where the office is, and you're not carrying out any day-to-day activities.
Or you may not even realise you're a shareholder in that business at all.
Well, you would hope that you would know if you had a share, but I know what you mean. But certainly with a sole trade and a partnership, you wouldn't normally be one of those unless you're involved in some way.
Yeah.
And then, of course, with a company, you've got the directors who are ultimately responsible for the actions of the business, aren't they?
Yeah.
The shareholders wouldn't normally get sued and lose all of their stuff. They would lose their value of the shares, but they wouldn't normally lose their stuff unless they're also involved in some way in running the business as a director. And then, of course, you've got employees, which directors are versions of employees. They're taxed as employees. And I think it gets confused for companies because if in a small business, one person might be all 3 of these things. They might own all of the shares, be the only director, and also the only one who does any work in a one-person business.
So I've had lots of conversations with clients before, and they're like, "Oh, well, such and such is a director, so can't they take dividends?" It's just like, no.
They'd have to be a shareholder.
Yeah, they need to be a shareholder, and it's like, and the person you're referring
to. Then they go, "Oh, I get you. Can you make them a director?" Then you're like, "Well, I can, but that's not going to give them any." It's like even when you explain it, it still doesn't land.
And then it's a case of, well, can I give them some shares? And it's just like, yeah, but that's not straightforward. That's not just a paper exercise. There's a lot more at play there.
You actually do, legal documentation required to do these things.
Valuations and stuff like this.
How much are the shares worth? Is there a tax liability? It's quite complex. It's worth also saying here, I suppose, that with a sole trade and a partnership, it doesn't really matter how big you are. You can still largely report your own figures, but for companies, again, because of this trade-off, there is a point at which you then need a formal audit, isn't there?
Yeah.
And we've got a pretty good episode on when you need an audit from Liam, I think it was, or Joe, one of the dads, I can't remember. But that is basically where you are getting someone else in to then go through and kind of certify that they have been looked at, and the auditor has taken on some of the risk then, isn't it?
It's at a higher level of assurance that they're offering, so they're going to be testing stuff a little bit more. There's going to be a lot more scrutiny on your numbers, and they're going to be reporting back on, again, material errors, like errors that would fundamentally affect a person's decision looking at those accounts. So an investor, if the numbers were so, they have to establish the level where the numbers are so wrong that they go, oh God, I wouldn't invest in this business.
Yeah, because the auditor will give a statement as to whether the business can be treated as a going concern or not, don't they?
Yeah, so that's another side of it. Yeah, they offer an opinion on that as well. So, and that's not necessarily the case of a sole trade and partnership. You wouldn't have to go through that process, but again, in order to enjoy that limited liability, then there are going to be additional checks that get put on.
And again, that's additional cost, isn't it? Because it's got to be someone independent. You can't audit your own figures.
No, you can't.
You can't mark your own homework.
Unfortunately not, no.
Which again, people don't like that. Say, oh, why can't I just say that I'm honourable?
I'm a stand-up bloke.
It's not as simple as that, is it? So you normally we've mentioned higher costs, we've mentioned audits. Probably worth saying at the moment, I think there was a consultation that ended recently as well that said can't remember who it was, but someone had suggested that all limited companies should have to submit what's called a full profit and loss. So at the moment, smaller businesses can still only present certain information to Companies House.
Yeah.
It doesn't tell them everything. To the point where I kind of almost say to people, well, there's nothing there that anyone can really use to do anything anyway. But there is a consultation to suggest that if you're a company, you should produce everything. So if you really are a super private person, you might just not want to go down that road if that's going to worry you.
No, exactly, and all of your stakeholders are going to look at your numbers then. So your employees, for example, can go on and see how much profit they're making. Yeah,
which they wouldn't be able to do as a sole trader or a partnership.
No, they wouldn't.
There's no information publicly available.
Yeah.
Okay then. We mentioned as a con for sole trades and partnerships the fact that you pay tax on profit. Is it worth just touching on how it works slightly differently with companies?
Yeah, so the company itself will be subject to corporation tax, and that obviously used to be a big benefit for setting up a limited company, because you would, when the corporation tax rates were at 19%, meant that you were generally better off in terms of if you were comparing trade for trade, like a sole trader and a partnership against a limited company, you'd be getting taxed less. However, you also then you get taxed again in the limited company when you want to draw money out, which obviously has a benefit, because if you don't get taxed on anything you don't need, as opposed to, unlike a sole trader or a partnership.
So we give a simple example: the 100 grand profit on the sole trade, you pay tax on 100 grand, whether you've spent it or not. The company would still pay tax on the 100 grand, but at the first bite at a lower rate.
Yes.
And then the person will only pay if they're a shareholder and they've had a dividend, or a director or an employee who's had a salary. But you can control how much of that you take, which allows you to roll up money within the company at a lower rate, effectively.
Essentially, yeah.
As long as it's in there, you will still pay the tax when you get it out. But if you want to save up as a business to buy a factory or something, you can save up quicker as a company because you only pay the company tax, not the full tax.
Yeah,
on any money you leave in the business.
Exactly. But I mean, saying that in terms of the company tax now, with potentially corporation tax rates going up to 25%.
A lot of that tax has been the savings been chipped away.
Yeah, that chunks become bigger and bigger, and slightly bigger than potentially having a small sole trader. But again, it's more nuanced than that.
I suppose the final, not the final thing, but one pro as a sole trade or a partnership, which we didn't mention actually, is what happens if you make a loss. So as a sole trader, if let's say you're starting in business and you've got a day job and you make money already, and you give it a go and you lose money in your first year, a lot of setup costs, you might lose money while you're building your trade. A sole trader and a partnership can actually offset that profit, not only against the future profits, but instead they can offset that against other income if they wanted. So I mentioned this to someone last week, and they were blown away. They were like, I didn't realise you could do that. And I got the impression that they'd been in that position and they didn't know they could have done that. So, you might lose 20 grand. Well, if you've got a 100 grand day job, you can knock that 20 grand off the 100. You get 8 grand back from the inland revenue. Yeah. Which is pretty handy if you've just lost 20 grand.
Absolutely, yeah.
It was worth having.
Whilst comparing that to a limited company, where if you make a loss, you can only pass that loss on to another one of your businesses if it was in a limited company, if it was part of a group.
Which is quite complex. So most people
again, requires planning and
most people start and have one company in there. They don't have any obvious way to do it.
And then another example I've done before is that the company's fundamentally changed what it does. So it may be that somebody has a limited company as a vehicle for one trade.
Let's say our window business, we lose a load of money, we go into another area of business. Yeah. You can't carry that because that trade is deemed to have ceased, isn't it?
Yeah, so even though it's in the same limited company, it's a different trade and you can't carry those losses forward.
So it's less flexible, I would say, the use of losses within companies. Yeah. Which again, I think, so I always say to people, well, are you going self-employed, right? You're starting your own business. Do you think you're going to make money from day one? And depending on what kind of business it is, well, they can't always say that. Obviously, that's the hope, that's the aspiration. But,
no one goes into it to lose money.
But you need to have that on, you need to weigh that up as one of the options. Absolutely. So quite a common route for people to take is go self-employed, once you're making enough money and you've proven the model works, you can always then go company if you need to.
Yeah.
And again, I don't think people realise that. What's quite hard to do, and there is no real provision, is to go company and then come out. It's much harder to do that because when you incorporate a business into a company, there is literally a relief called incorporation relief. There isn't at the moment a disincorporation relief.
Decorporating.
Yeah. So if you buy a load of gear, tools and equipment and, property within a company, there isn't an easy way to get them out and say, I've decided I just want to be a sole trade.
In fact, I'm pretty sure because there is a thing called terminal loss relief, where you do close down a business, where you can claim losses back.
Yeah, much more flexible for individuals, yeah.
But
so companies can do a terminal, but only against the same trade again.
But I'm pretty sure that isn't there a time period in terms of setting up another business, which will then disqualify that?
Yeah, but
we get into very niche areas.
Complex areas, yeah.
So areas I feel very uncomfortable advising about or talking about.
And also, you might embarrass me because I'm the tax guy. I meant to know this. Yeah, but yeah. So there are, with everything we've talked about here, there are unusual exceptions. But we're talking about the
broad strokes,
the key things here.
Very broad.
Is it worth it? Because I think there's a bunch of things that a lot of people think are different depending on the structure. So one thing I hear often is, you can offset more expenses as a company. And there really aren't. There are some quirky little weird things, but largely if if we're a window company and we're a partnership, we buy stuff to use in our trade. I don't know why I picked that up.
Of course, every window company has
we buy tables and equipment to use in our trade. We can offset that.
Yeah.
It's not like where they go, you can only have that table as long as you're a company.
Yeah.
Travel, we can claim travel through all of these. The cost of the goods we're selling, paying for help, the website setup, all of these things are all allowable.
Even like the plant and equipment, which I think is probably a big area people don't realise as a sole trade, you can still get those capital allowance reliefs.
Yeah, you can still claim relief for your tools and equipment, absolutely, yeah. There are unusual examples. Electric cars are pretty generously taxed through limited companies. Probably for the next couple of years while the government's trying to encourage people to get electric cars if they're going to have a company car. But again, there's not that many things where it's fundamentally different. And also I think a lot of things are basically no different. Insurance, we've talked a lot about the different risk factors within the three. Get really good insurance and it shouldn't matter about your risk because that will cover you if you do something stupid.
Yeah, so we're talking about
accidentally blow someone's house up. Hopefully your insurance covers you.
So you've got your indemnity insurance, but also thinking about kind of your key man insurance, which even as a sole trader, you can get insurance to protect you and your family in a time where you're incapacitated, can't work, and it'll be guaranteed against your, benchmarked against previous profits.
So get good insurance. I suppose it's always worth sitting here though, so, why would you not just get good insurance and be a limited company and then you can never lose anything? And a simple example is, let's say we are window fitters and...
You're really pushing the window fitters.
And I'm going to go, you Jack, you're the weak link by the way. Then go, and I've told this guy we're going to fit his boiler. Give it a go, how hard can it be? Well, your insurance isn't going to cover you as a window fitter, it's not going to cover you to do a gas boiler. Because you shouldn't be doing it. You're not registered, you're not certified. And also, the limited liability protection won't cover you through the company because you didn't do that as a director. You should not have done that. A director would know that they shouldn't have done work they're not covered to do and is technically illegal anyway.
Yeah,
so
that'd be
So you can get through all of these protection layers if you just do something so stupid you shouldn't have done it.
And even in that example there, it's one of the rare examples where you probably see what we call the veil of incorporation lifted, and even though it happened in a limited company,
they will still come after you.
They'll come after you personally. Yeah.
So fraud and severe negligence will lift that veil. Is the way the terminology is. You will not be protected if you're seriously negligent or fraudulent. You'll still lose your stuff.
And another example in terms of limited companies and their, in terms of them not necessarily being as foolproof as people hoping, is that in terms of funding, people might borrow money through a limited company and go, oh, fantastic, that's the business's. So if it all goes,
I can just let that go. Well, I've just wrote down what you're saying.
Yeah, exactly. Yeah. So but if you're a brand new company with no trading history, then any funder that's going to give you money, and even then there may not be that many, because I've dealt with them before. But even if they do accept you, then they're going to likely have personal guarantees.
Yeah.
Because again, they're going to be like, I'm sorry,
we're not going to lend your company because there's nothing to get the money back against.
All
so we want your personal stuff on the line anyway.
Yeah. So again, it's not the case of like you can protect everything through a limited company and have additional safeguards, because other people have done it before, and people are wise to things where they go wrong, and they're gonna put safeguards in against that. So yeah,
I think something that I touched on earlier that I thought about, which I didn't necessarily come up with. So we just talked about losses there and how sole traders can offset their losses. I think it's worth bearing in mind here. People need to probably have a think initially about whether their activity is actually a trade or whether it's investment, because the rules again are fundamentally different. So property is a great example.
Yeah.
I'm buying property. Should I do that as an individual or should I do it as a company? Well, it depends what you're going to do with it, and it depends is an answer for most tax questions, fortunately.
Yeah.
But it does make a fundamental difference to making sure you're actually in business, because the other side of a trade could be investment, but also could be hobby. Oh, well, I knit jumpers. I'm going to sell them. What if I don't make any money? Well, are you knitting jumpers with a view to making a profit? Because if you're not, if it's just a hobby, you like knitting anyway, you can't then just claim the cost of all of your wool and your needles. Jack, no matter how many times you keep trying.
I will eventually get through.
But also we see people who kind of go, oh, well, I'm a farmer. Oh, well, what's your farm? Oh, well, I've got like 3 goats and a handful of chickens. Are you selling eggs commercially? Are you trying to make money?
Well, no, I'm subsisting. It's like, well, you're not a farmer then.
Yeah, because you can't just put all of your costs through for something because it feels like it might be a business. It's got to be a business. Yeah. So again, most people are probably starting and they're thinking, well, I want to do this commercially to make money. But what you can't do is just say, oh, well, I'll say that I was just so I can put a load of expenses through.
Yeah. On the flip side of that, I think people who try and avoid trading is generally kind of in that second-hand cars is always a good one, isn't it?
I'm not trading at all. How dare you, sir?
I just happen to sell my car and buy another one.
I just like buying and selling cars every week.
Yeah, but I always planned to keep this one forever until I sold it.
Yeah, that was my forever car.
And then I kept it. Kept it for a week and sold it.
So again, HMRC over the years have battled many people on what they call the badges of trade. If it looks like you are trying to make money, you should be declaring this and paying tax on the profit you make. You can't say, no, it's just speculating in 40 cars. You're a car dealer, you need to be paid. Yeah.
And I rented a forecourt in a garage and employed
I had a team of people waxing the cars, So the other common thing I would say, although sole trades are easy, quick, simple, I would say one thing you should have in common is your systems should all be good.
Totally.
There's no excuse now, I suppose, other than ignorance, and I mean that as in you didn't know about these things, but we see sole trades very small with separate business bank accounts, really good account systems, really good CRM systems, raising great invoices, capturing the expenses really well and super efficiently. Gone are the days, I think, where only large business have those accounts teams that can do that.
Yeah.
Anyone can now do that, and I would say should do that.
Totally, yeah.
Because that's where the perception of big business established, trustworthy comes from, by having these things in place.
Yeah, I mean, when I first started, there wasn't cloud-based software. It was very new. So we would just rely on the larger clients having desktop versions of account software, which weren't feasible for small businesses. So you'd get a shoebox.
It just wasn't possible, was it?
Yeah, you get a shoebox or an Excel spreadsheet or
a handwritten ledger or something. Yeah, but there's no excuse now. Everyone can have good. Yeah.
And it's simple stuff like having a separate bank account, as you said. It's like, because at the end of the day, if you do need to do some manual analysis, it's much easier doing it from one bank account as opposed to, I paid some out of this and then out of the joint account. I didn't have some stuff on my personal credit card as well. And yeah, it still happens now, to be fair, because...
Oh yeah, business need happens, you know, I need to pay a bill right now. I've only got my personal card, so I'll pay. But go into these things with proper planning.
Yeah.
Have a business bank account where all the money goes in and all the money leaves. Like, just get those basic things.
But even then, you can't even... There is even systems around that in terms of making sure you only have one card on you, because you can get one of those curve cards, which is like a...
Oh yeah, that can pretend to be multiple cards.
Yeah, so
It doesn't pretend, it is. It presents
yeah, it's not a fake credit card. That's not what we're suggesting.
I'm presenting as the card of Richard Branson.
Yeah, but essentially it's a card which you can check out and pay for, and then at a later date you can allocate that against.
In the app you can switch which bank account you're paying with when you tap it. Yeah. So again, there's no excuse with that prior thought. You can get these systems right, can't you?
Absolutely, yeah. And you're right, kind of good habits, even though it's your first invoice, like raise a sales invoice.
Do it properly, yeah.
Do it properly.
And that comes on to the next thing as well. So I was going to say legals, Jack. I think, again, people think, well, just because I'm a sole trader, I don't think that exempts you from having what I would call your legals, right? If you're engaging with people and you're extending credit terms, or you're doing anything remotely risky or complicated, you should have terms and conditions for everything you do.
Yeah.
It baffles me that gas fitters will turn up and they'll replace your boiler, and they, other than say about 1,400 quid, they haven't set out any, like, nothing.
Yeah.
It's like, well, you know, I'm baffled by that.
Yeah.
And then they'll just send you a text and go, send us 1,400 quid to this bank account, and the name doesn't even match the name of the business. You think, am I getting defrauded yet? It's like,
particularly you go through the fraud process now on online bank accounts. It's like, are you sure?
Yeah.
Are you sure?
It's
like,
like,
I don't know.
Dave Gasfitter. It's like, business name's not matching here, Dave. Oh yeah, it's actually in our lass's name. It's like, what? who am I paying you? Who's doing? Yeah.
And she's not. We're not married, so she's got a different surname. But trust me, it's the right bank account.
It's like, okay, but yeah. So you know, all businesses I think should have basic T's and C's. If you're sending a quote, put some basic info on the quote. Oh well, you know, it's only valid for 30 days. I wanted 50% deposit up front. I'll raise the invoice when the work's finished. All of those basics.
Here's the scope of the work, because again,
this is what I'm actually quoting for.
Yeah.
So if it's a gas boiler swap, that doesn't include, you know, radiator valves on every radiator. It doesn't include flushing the system, or does it? Basic things like that help avoid dispute, don't they?
Exactly. Yeah, and it helps you further down the line, because you suddenly got some objective evidence of.
This is what we agreed.
Yeah.
When you sue someone for non-payment, but this is what we agreed.
Yeah. And they haven't got evidence. Because where that ambiguity lies is where disputes happen.
Yeah, 100%. And again, on partnerships and companies, the flexibility of the sole trade, it's all you. You know, we then said, oh, it's a partnership or a company. Companies could be one person as well, but let's just assume a business where there's multiple people involved. People only normally tend to fall out with other people. Yeah. So once you have multiple people in, you're significantly improving your chances of falling out with your business partners.
Well, you say that, I'm sure there are some people out there who can fall out with themselves in certain scenarios.
Yeah, we've acted for some over the years. But yeah, so, you know, get a partnership agreement or a shareholder agreement. And the problem here is all of these things sound complicated, expensive and onerous. Some of them are more onerous than others. A shareholder agreement will cost you money, but, you know, watch The Social Network. What is that? You know, Zuckerberg and the guy who got no money. It's like, probably wish that he'd had better legals. And you know, not everyone's going to start up a multi-billion-pound unicorn business, but you know, you need something in place for when stuff happens.
Definitely, and it can only happen when you're getting on, because you can't thrash one of these out when you're falling out with each other.
Once it's too late, isn't it? Oh no, we always said we would share all of this, didn't we? Can you sign here? I'm not saying that, it's too late.
Yeah, and it's, and I think people kind of take a lot of, they kind of almost, they're insulted when you suggest it, and like even like that husband and wife kind of setting up a limited company, like, oh, we don't need to do that, like we love each other, or we're best mates, like
love conquers all.
Yeah, and everyone feels like it's a bit too corporatey and, you know, heartless, but in the end of the day,
until you learn your best mate's lazy and does no work, and you're like, oh, I'm fitting all the windows here, Jack, what's going on?
Yeah,
I'm starting a side business. All right, okay, well, that's not what we said.
No, it's and it's just so important to have that stuff agreed. And again, like, so if the worst case happens, like, all he can, at that point, he can just go, right, this is how we agreed it would separate. Yeah. If we had both agreed that it wasn't working.
And I'm sure any solicitors watching would kind of go, oh no, only solicitors should draft agreements. But any agreement that sets certain key things is better than nothing.
Exactly.
So even if you're writing it yourself, I wouldn't recommend it necessarily, but if you absolutely cannot pay someone to help you or you refuse to, then you should at least have something.
Definitely, yeah. And
even if it just covers, well, what happens if someone leaves? Well, if you leave, I want your stuff and I'll pay you a fair market value. Like, that's missing from so many businesses, it's unbelievable.
And it comes back to the insurance as well, in terms of what happens if, unfortunately, one of the partners dies or is incapacitated. What happens in that scenario? Because if it follows kind of natural probate, you could end up like equal partners with your business partner's wife or husband.
Widow, who you never liked.
Who's never, who doesn't know what they're doing.
Who just wants to sell the business. You're like, I don't want to sell the business, it was going all right actually.
But you can get insurances again out there where basically that covers the cost of buying them out at an agreed rate.
Yeah. And if you get it when you're young, it doesn't cost that much money, doesn't it? Yeah.
Exactly, yeah.
Just to quickly rattle through, then I think a lot of people think that payroll and VAT is different. A sole trader could have 100 employees, they've got to have a payroll, they've got to have a pension set up. A company might look massive, but if it's one person, they might not need a payroll, might not need a VAT register. So again, there are some slight quirks to this, and this is one where there are some unusual things, but again, businesses need payrolls as soon as they're employing people, it doesn't matter what size they are.
Yeah.
It's the nature of the engagement between the person doing the work, not the size of the business. Yeah,
and I think with sole trades and partnerships, I think everyone assumes incorrectly that it's just a case of, well, it's all very informal, so I don't need to go through all of those additional steps. Like, I don't need a payroll for myself, so they'll use that argument against you in terms of like, well, I don't have to, so why do I have to do it for these people?
So why would I have to pay me mate who comes up and helps us every day for 80 quid? Because he's an employee.
And then guess what, your mate then suddenly, is if it's his only job and he's trying to get a remortgage, and they go, well, give us your pay slips, and you go, oh, no, we haven't.
Or you sack him when he sues you.
Yeah.
It turns, now he thinks he was an employee. Because people fall out.
But I suppose the other thing I would say is, like, although you can, even though you can as a sole trader or a partnership have employees and VA and register for that, etc., purely from a limited liability point of view, I'd kind of start, when you get to that point, start to think about a limited company, just because like, you don't suddenly want to be on
just
the hook
increases all the risks, doesn't it?
You don't want to be on the hook for your VAT liability when the business all
goes. Because to be fair, before we were talking about risk, we were talking about, you blowing someone's house up by doing gas and you weren't meant to. It could just be that you start to lose money and you've already got the loan, you've already got, big wage bill, and you can lose money through not a stupid action. You can just, the business can just cease to operate profitably. So you're protecting yourself from that as well. Because if it was just a case of not fitting gas boilers, no one would ever have insurance. You just go, I'll just not do that. But like, there's other things that can go wrong, isn't there?
Yeah, definitely. So it's just a case of protecting yourself against all of that unnecessary stuff.
And my final point really was, they all require some form of registration. So the more said sole trader, as soon as you've started, you still have to let the Inland Revenue know. Partnership, you still have to let them know. You're just telling them, you're informing them rather than asking if you can. Whereas technically with a company, if you want to register a company, although 99.9% of formality, you're still asking them to form a company for you. And Companies House can still reject. If they don't like the name you've used, for instance, or you're trying to set up as, Coca-Cola Newcastle, they wouldn't let that run. So that, there's... Or
if you're trying to set it with a disqualified director or something like that.
Or you're trying to have someone who's not allowed in business, So, I mean...
And it does take a little bit of time. You said it doesn't take that long, but still, like, that's why a lot of people, like, will instantaneously want to start trading. So, like, they may win a job and go, like... We've had it before where they won a big contract and they're like, I need to get an invoice out the door, and it's just like, and particularly when they're dealing with a limited company who's
invoicing, the company literally doesn't exist.
They have, like, the person, their customer has a level of systems and controls, so like their purchasing department are like, well, okay, who are you? What's the entity called?
You need a purchase order for this, like, we don't exist.
Is this VAT, is there going to be VAT on this? And you're like, oh, I don't know.
Yeah. So actually, the tip there then I would say then is, it's, we get people who walk in and ask exactly those questions. I need a company form tomorrow. And we're like, we've never met you.
Yeah.
Like, we know nothing about you. We don't know if your company's the right thing, the wrong thing. And a good advisor would always want to know a little bit about what you're trying to do and why, so they can then actually give you some advice as to whether it's a good or bad. It's not a good idea. We're not rating the quality of the business idea.
It's not Dragon's Den here.
Yeah, it's not like, sorry, I'm out.
Yeah.
It's not that. It's, we want to make sure you're doing the right steps to help you get where you want to be.
Definitely. And if you do get someone like us involved, there are additional steps that we have to go through, as you said. Like, if we don't know who you are, we're going to have to go and do our due diligence.
We've got to verify your identity, etc. Yeah. So, although in theory you can set a company up in a day, reality on the ground is it will take a bit longer because you've got to go through those hoops. Yeah. Is there anything you think we haven't? I mean, there's lots we haven't covered, but on keeping it relatively basic, do you think we've pretty much done it there, Jack?
We covered it off pretty well, yeah.
Solid. Well, I'm going to mark my own homework on this and say I'm going to give us a solid 9.5 on that one.
Well, yeah, I can verify that as well.
Good.
I'll mark your bits. And
as someone who can,
Although
been involved in audits in the past.
You've dragged my name through the mud about fitting windows.
Well, it was the windows were alright. It was the gas boiler, Jack.
Is it a bad time to announce that I'm setting up as a?
It was the boiler that did it for you. It was the boiler. I'm telling you. I don't know why you had to do that.
Yeah. Well, I thought I don't know if
it was greed or stupidity, but
It's this old plumbing, isn't it? It's this Lego sticks all together, don't you?
Pipes
stick it all together.
Yeah. So there we go then. Structures. Which one? What do you need to think about? We do have some help sheets on this on our community platform as well, which we can link to the platform. In the classroom section on there's help sheets. But also, if you're thinking about doing it, pop in, tell us what you're thinking. We'll let you know what we can do, what you need to do, and we'll help you. That's what we do. Great thing I picked up from Danica, who was on quite a while back talking about how your words should sell. A lot of people say, a good accountant should save you money. I would argue a good accountant should help you make money. And again, why would you not want someone involved who wants you to make as much money as possible?
You're right. There's a finite amount of money that they can save you. But there's an infinite amount of money they can make for you.
Yeah. You can only cut costs so far, can't you? You can only claim tax relief on the right things once. But if you get someone who genuinely is interested in you making more money, even if you want to cynically believe it's just so you can pay our bills,
you're extortionate.
But we still want you to make money. So yeah.
Yeah, definitely.
And get involved before you need to raise your invoice. That's always a good idea. Thank you very much, Jack. That was good.
Pleasure,
as always. We hope you've enjoyed that and we hope you got something from it. And as always, hit us in the comments.